Welcome to a tutorial series on how to use app.tread.fi. It's an algorithmic execution platform for crypto for both centralized and decentralized exchanges. This is the first of many videos in the series. I'm going to be going over all of the different execution strategies, what to expect, how to measure performance, and then dive a little bit deeper into the multi-leg strategies, the funding rate arb trades, the perp arb trades, options trading. So we're going to start off very simple with just single leg execution across both algorithmic order types and simple order types in this video. So if you've used this before, you can probably go to the next videos. But for new users, I think this will be pretty helpful because a lot of the features that we have on our platform are an extension of what are offered on centralized exchange UIs. So typically you'll see limit orders, market orders, stop loss, take profit, but you don't have access to a very good VWAP or TWAP on the exchanges. And so you can think of TreadFi as a power tool for exchanges where we connect to your existing exchange accounts and then provide additional functionality that makes it easier for you to trade not only size, but also more complex order types and order instructions. And so the first step is to create an account, and you can go over the videos on our API docs to see how to create an account and connect an API key from an exchange or wallet in the case of Hyperliquid. But once you've done that, you pretty much have access to the entire platform. And so the first thing we're going to do is actually select the pair that we want to trade. So on the TreadFi platform, you can pretty much trade every pair that's available on the exchanges that you have connections to. And so anything from spot to perps to data futures, you'll have access. Data futures, you won't have access on this. You have Deribit, but otherwise for perps in this list will be everything that's listed on OKX. And even for the names that you may not have access to, we do list it. And so you can check which exchanges you might need to connect in order to get access to those tokens. But otherwise, let's start off with a pretty basic ETH trade, ETH perp on OKX. First thing you'll notice is we do have some high-level metrics about the pair on OKX, just on the top here. Some of this is derived from our prediction model, so things like 1 hour predicted volume. We just display it here for transparency, but really the engine uses this in the backend to make better decisions. The limit order book as well, you can take a look. It's updated live on OKX. Their API really just offers 5 levels, but on other exchanges, you'll see the full 10, 20 levels that might be useful for you. And then on the right here is where most of the logic goes for your execution strategy. So let's start off with something very simple. Let's say $10,000 ETH perp USDT on OKX. If you click into the strategies dropdown, you'll see all of the strategies that are offered by our platform. They're grouped into 2 different categories: strategies, which are really the algo order types, and then simple order types, which are just the same, if not similar, to what's out there on the exchange APIs. But let's start off with just impact minimization, which is the default strategy by design. It is it's a strategy based off of a VWAP trajectory that uses a variety of market and limit orders to get your order done over a fixed time period. And so I'll go into some of the other more participation rate based order types in another video, but for impact minimization, it's very simple. You tell the engine what you want to buy or sell, how much you want to buy or sell, and a duration of how long you want to execute your order. So for the purpose of this video, we'll just keep it 5 minutes so we can actually see the order execute. And the last thing to kind of take note is the pre-trade analytics. So before you kick off an order based off of the prediction models, we can kind of estimate how much, or I guess, yeah, how much your volume is going to affect the market, or your trade is going to affect the market. Participation rate is just a percentage of your order quantity over the duration that you set versus the market quantity or market traded volume. So in this case, we're only trading 3.6 ETH worth of volume, and the predicted 1 hour predicted volume is 785. And so over 5 minutes, we interpolate that down. And so we predicted you to be only 0.08% of market volume. If you increase this number, you'll actually see that the participation rate actually goes up, and you'll see that the color also changed. So Red is a warning. 13% participation rate is quite aggressive. What this means is as you're trading this over 5 minutes, you'll likely be 13% of the market volume. That may impact the prices a bit more. And so you'll see that if I drop this down to a million, and it goes down to 1.3, okay, maybe I'll try like 500K. Yeah, you have an intermediate color here, 0.6%. And that's where it's still aggressive, but we don't expect you to move the market that much. So let's bring it down back to 100K. Or actually, I had 10K before, but 100K is fine. And so at this point, we're just 0.3% of 0.13% of the market volume looks fine. Order volatility is a measure of how volatile the pair is that day. And then over 5 minutes, and I think one standard deviation, we expect the price to move either up or down by 0.2%. So today I mean, it's not just using one day of volatility, but today ETH is up 3.3%. And so over 5 minutes, we might expect it to change 0.2. This uses a number that looks much further back in time, and so it could be skewed by results that happened a week ago or even a month ago. But this is a good measure of how much you can expect the market to move without your participation over the 5 minutes or whatever duration you've set. Market volume is also another more general metric of how much today's market volume ended up coming in at relative to how much the expected market volume of the last 21 days was. So 1.3 just means today we predicted a certain amount of ETH to trade on OKX, but the realized one over the last 24 hours is 1.3x of that. And so the predicted was probably somewhere around 600, like 550 to 600K. And we actually saw a little bit more than that. So anything above average is a good time to trade. You can send in bigger orders and not see the price move too much. And there will be a lot more other participants. And so you'll be able to not only blend in, but a lot more liquidity is available. So once you've got all of this set up, you just submit the order. There are actually, before I do that, there are just a lot of different settings, and I'll go into some of this in a later video, but we'll just play with the vanilla settings for now. You do get an order confirmation, which allows you to see this information once again, but right before the order is sent in. The target quantity here is actually an estimate. Whatever number you fill into the base or quote fields is what we're going to be targeting. And so if the price of ETH moves down, you might get a little bit more ETH here. If the price of ETH goes up, you might get a little less, but you'll most likely get something very, very close to 100K. And so just place an order. You'll see it pop up here. There are settings where it will pop up onto a new tab. It's all configurable in the settings page, but essentially once you've submitted the order, you'll see that the 5-minute order has started trading. And so right away, you can actually see that the engine has split up your 100K order into smaller limit orders. And so on this table, you can actually filter by active placements or see all of them, but you can see what we have out on OKX. And so this is a very dynamic table. You can see it graphically as well relative to the bid-ask spread here on this chart. The triangles will represent these active orders. And so at least for this order, the engine decided to slice each slice at some range between or up to about 2.6K. This number is actually not predetermined. It's fully dynamic based on the market conditions, based on what's happened to the order so far. But each of these little triangles represents one order on OKX. And if you go to the OKX website, you can actually see those orders getting placed and moved around and canceled and whatnot. And so we only have 5 minutes, so I'll just talk about what the engine's really targeting in terms of execution here. So the game plan is we want to go and trade 100K over 5 minutes. This solid line in the middle is our engine's target quantity. So over time, the target's going to accrue, eventually getting to 100K. And then these dotted lines are what we call tolerance bands or discretion bands, where the engine will place passively until it gets to the bottom of this tolerance band, in which case some of these limit orders that you see here might get translated into market orders in order to stay on schedule. currently, right now, you actually see that the execution strategy is falling behind, but it was slightly ahead here. And so when when the execution schedule, so what we got filled, is ahead of where the min bound is, it's going to sit there passively in the book with a variety of limit orders. And you can actually see that these limit orders get moved closer and closer to the book. And so as we get closer and closer to the min bound, we place more aggressively, ultimately turning it into a market order or an IOC order if we need to, in order to make sure that we don't get too far behind the min bound. But if the execution schedule ends up being closer to the max bound, we're not going to place more until some more time has passed. But yeah, like as a trader, you just have to take a look at this chart here just to see how the engine has traded over time, how it planned to trade. This is the impact minimization strategy is based off of VWAP, so it's not a TWAP, and as a result, you can see some kinks in the line. The VWAP will be a cumulative distribution function based on the market volume that we predict to see binned over the period of time that we're trading, whereas a TWAP is a linear trading schedule over time. And so it accrues over time, and this accrues over market volume. And so you do see it does want to trade a little bit faster in the beginning, but slow down in the middle, but then just kind of take it more steady near the latter half of the order. But yeah, otherwise, the green dots represent makes, red dots represent takes, and these align with the bid-ask chart as well. And so you can see exactly what the engine or how the engines fill the quantity that is filled so far, as well as what it's kind of planning to do. And within the shorter time period, where the limit orders are relative to the bid-ask spread. So you can guess roughly how your execution is going to look if the prices move towards you or move away from you in the next few seconds, or if your order was longer, it might be the next 30 minutes or so. But yeah, the mechanics here, in terms of how the orders get filled is, let's say for this example, there's a limit order here at this price. If the price moves through you, then you're gonna see the triangles convert to green dots. And so, okay, we saw a little bit of a fill there. Um, and at that point, we just kind of follow the schedule. And if we get a green dot, if you're gonna make, that's great. You don't have to cross the spread, you save on exchange fees, and you still get the order done. And so looks like the order has just finished. So now that the order is done, we can take a look at some of the TCA metrics to see how the order did. The metrics are kind of displayed at the top here. They update live as you trade the order, but at the end of the order, you can take a look at these just to see in retrospect what happened. The easiest one to understand is probably this. So 62% of the order was done as maker and 38 was done as taker. This directly affects what exchange fee you end up paying because taker fees tend to be much higher than maker fees. And so from a very superficial high level point of view, you want to get more maker because the exchange fees are smaller. And so a passive first, aggressive later algo like impact minimization is going to help you minimize that, but not at the cost of opportunity cost. So it's still going to guarantee the order finishes in 5 minutes, but it's going to try to maximize this. The second level effect of having more maker orders as opposed to taker comes more from market impact. If you keep on taking liquidity away from the book in periodic clips, as a lot of the TWAPs do in crypto, the market makers pick up on this as well as allow for more traders to go and pretty much impact the market consistently without allowing the market to catch up or to slow down. And so having more makers ends up being beneficial for the order as a second level order effect because it also allows for less impact in the market. Market orders are quite aggressive. They go and signal urgency to the other participants. And so even if you slice your order out into smaller chunks or clips and market it out once in a while, market makers, other passive traders will pick up on this. And if you do it too fast, you won't allow the limit order book to adjust or reload per se. But the act of taking market orders periodically, even if it's in smaller clips, ends up moving the price a lot more than if you were to have limit orders on one side and allowing the market to move towards you. You pretty much bias the results so that prices move away from you and you end up having to buy at a higher price or sell at a lower price. And so having more market orders ends up being detrimental to the market impact number. And so that's kind of a good segue into the slippage number. And so this slippage just represents the average executed price. So in this case, we like throughout all of these fills, if you volume weight them or rather quantity weight them, the average execution price, which could have been the entry or exit price, depending on how the order was set up, was 27.1936. And so this number represents how this average execution price compares to the mid price at the time of order entry. And so the alternative would have been to go and send a $100,000 market order directly into the book and then see how many levels it goes through. And the goal of this slippage number is to beat that number on average. Because oftentimes, especially if you're not trading large, and I'm talking like 50% plus participation rate orders, if you're not trading large orders, you're pretty much blended into the market. And so half the time, the prices will move away from you, the other half will move towards you. And so it's normally distributed somewhere around zero. And over a larger sample size, you'll see that half the time you win, half the time you lose. But generally, you want to allow for the mean or the median to be somewhere around zero. So no matter how big your order is, you don't have to worry about how many levels of limit orders you'll go through or what the spread looks like. You'll end up paying zero on average. And so it does vary quite a bit based on what the market did. So let's say, for example, in the 5 minutes that I started trading, the market decided to pump. I don't think it's due to my 100K order, but it decided to pump. My buy order is going to get a bit more expensive. But given the random walk theory, let's say the market decided to dump, your slippage will be negative. And so for each order, you can actually take a look at this. For more difficult orders, you might see this number and just try to gauge how much it impacted the market. And so that's a good segue into the next number, which is his participation rate number. Oftentimes, the difficulty of an order is measured by how much volume you're doing relative to the rest of the market. And so unlike the number we saw in the pre-trade analytics, which is based off the predicted volume, this one is based off of realized volume. So while we were trading the order for 5 minutes, there was about 8.7K of ETH perp that was traded on OKX. And we pretty much just made up 100K of that, like 100K USDT of that. And so we ended up being 0.5% of the market. If this number gets too big, then you'll end up moving the price quite a lot. And so thankfully, as a trader, you do have the optionality to go and adjust duration. And so the market volume is always a function of how long you capture the market volume from the market. And so if you trade over 1 minute, it might be a small amount. If you trade over a day, it'll be a huge amount. But you can play around with that. So even if you're trading illiquid tokens that might have a small amount over an hour, let's say, you can trade over 7 hours, 10 hours, and manipulate the denominator so that more volume comes in. Ultimately, anything under 10% is not overly alarming, although 10% is quite aggressive. Anything under 1% or even 2.5% is pretty much invisible to the market. You're just moving along with the other participants in the market, and so you can get liquidity for free. Depending on the duration as well, another function of the participation rate is as this number gets bigger, you might rely more heavily on taker orders to get your order done. An example would be if you're trading over 5 minutes and there's, let's say, 100K that's traded over 5 minutes for that specific pair. If you're trading 1K, you can probably get your limit orders filled. If you're trading 100K, and so you're 50% of the market volume, it's highly likely that your limit orders won't get fully filled and or there's not enough other participants to fill your limit orders. And so you'll rely more on market orders. And so you'll get more slippage, you'll cause more impact to the market. It just has a side effect of having this more difficult order out in the market. And so these are metrics that you can just take a look at. Oftentimes I just track it because it's real time. And so I can see how the engine is placing, how it's doing within like the medium time frame where you can see if it's falling behind and needs to catch up soon, or if it's like way ahead and maybe I can slow it down a bit. But after the order is done, you can also take a look at the page, and you can access it just via the main panel where you can see the latest orders, or you can go to the orders page where you can go look at all of your orders and filter them out. But after the order is done, you can take a look at this just to see how the order executed. The numbers that I look at right away are the slippage numbers. This is more of a safety check where I just want to make sure that, especially if I'm trading a difficult order, that I didn't move the market too much. And then I'll take a look at just this chart right here. If it's a longer order, if it's a passive order, I would expect to see everything to be green. If it's a shorter order, maybe I'll see reds here and there. But I just want to make sure that the executed quantity follows somewhere within the min and max bound. Another kind of caveat is with these orders, oftentimes the exchange will send us some sort of message. So messages such as like not enough balance or insufficient margin will show up here. And if that happens, the order could fall behind it a little bit. And so it's always good to have this page open and take a look to see where things go potentially wrong or where things went right. So I think that wraps up the first video. In this video, we went over how to select a pair, how to kick off a trade, and how to look at the results and understand what's going on here. In the next video, we're going to go over some of the other trading strategies. I wouldn't say one is better over the others. They're just used in different scenarios, have different objectives. And so depending on what you care about as a trader, it can provide you the right tools to get those objectives met. We'll also go over multi-order, so portfolio trading and funding rate arb trades in the next video. These provide more tools that allow you to go and trade things that just aren't available natively on exchanges. Trading a portfolio or a basket of names or running the funding rate arb trade can be very simple on our platform. It takes only a couple of seconds to set up, and then we handle the execution. So tune in for the other videos, but thanks a lot for listening to the first of many. And if you have any questions, we do have Telegram and Discord, and so feel free to ask questions there. But I hope you get to play around with the tools and become a better trader. We did most of the work so that you don't have to figure it all out. You just have to tell us what you want to trade, and we'll figure out the really nuanced question of how to best trade it. So thanks a lot, and see you in another video.